Hi, guys, welcome to this week's episode of Global News Review. My name is Ola, and I am the founder of the Money with Club, Money with School, and the Money with Media. And basically, what we do is that we teach people how to put their finances in order. And that's also what we do on this channel. So if you haven't already, please subscribe and hit the notification button. Now, on the Global News Review, what we do is that we discuss the news and how it affects your pockets, what you should be doing differently, what adjustments you should be making. And so if you haven't ever, please share with a friend once you see this video. I promise it will be insightful. Now, of course, going straight into the news, the first news we're going to be talking about is going to be about Apple versus OpenAI. I'm sure we know that OpenAI is the owner or the founder. No, OpenAI owns ChatGPT, the ChatGPT that we know, right? And then there's this guy called John Ive or Ivy. I'm not sure what the proper pronunciation is, but he's the one that was the brain behind all the eyes that you know, like the iPhone, iMac, all those things. Right now, what's happening is that he left Apple in 2019 to start up his own company. Now, that company that he formed has now been bought over by OpenAI. And what they're trying to do, or their goal, is that they want to produce a device that works in tune with ChatGPT. What do I mean? Currently, ChatGPT is like an app on your phone. It's not the driver of your phone, it's not the operating software. So they are saying they are coming up with a device that is going to be like the way you use Android on Samsung phone. It's going to be like that. And it's going to be powered by AI. And it's going to be wild. Now, why was everyone excited? Apple investors sad. Why? Because this guy has a track history. He has a track record. He was the one that was behind all the eyes. And we might even find that maybe the eye behind the iPhone was him, right? Random thoughts, but really he was a guy behind those designs. And if he's coming up with something new, and we know that touchscreens were like, I mean, when I was in secondary school or university, even though we had mobile phones, touchscreen was not a thing. And then all of a sudden Apple came and touchscreen just became everywhere. Touchscreen just became the thing, you know. And we know all the things that Apple has come up with. That's the guy. And so everyone is excited. But on the other hand, Apple investors were quite destabilized by the move, also because Apple is kind of struggling in terms of growth numbers. Well, struggling is relative, we understand. But yeah, we get the point, right? And so Apple stock prices tanked a little on the back of that announcement. But beyond even Apple stock price, let's just think and see the evolution of technology over time. Like there was a time when it was those big mobile phones, right? Then we moved to the smartphones, made them smaller and smaller and smaller, more compact. Now they're like computers on the go. Now, what's the next thing? There's obviously going to be a next thing, right? Now, these are the guys saying that we should watch out. There's some device they are coming up with that is going to bust your brain. And of course, we, the consumers, are here for it, right? Um, and then the next thing out of the US is a company called Picasso. Now, what's the story around Picasso? Like, so what do they do? No, the first thing that is an opportunity to invest, right? They are pushing out, they're selling some equity stake in their company to the public. Now, from a venture capital perspective, usually venture capital deals, meaning private equity deals, meaning investing in a company that is not on an exchange, is usually, I hear, somebody tells me, brings me into the loop. But what these guys are saying that in the past they would have loved if they had an opportunity to invest in some particular companies if they had heard about it. And so they are being sweet and nice by opening up to the public if interested to take up a part in the company. Now, what is Picasso? Now, basically, what they do is that they are a luxury home rental company, and they have spread to a point where they're making $100 million in gross profit annually. Their last annual report showed 100 million in gross profit, right? And they are growing. And they just said they've not even tapped up to 1% of the total market, addressable market in that space. And they're saying, come and invest. And if you have been in tune with any global news, blah, 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 there has been so much of a buzz. Now, what is my thoughts? My thought as an investor is that it looks viable. we need to dig deeper. I mean, we could actually drop the link, but Google it, Picasso investment opportunities, like everywhere, if you haven't seen it. They have their current valuation is about $860 million, right? What are they saying they will use the funds for? Let me just read it out. They're saying they use the funds for from the growth round funding to expand their portfolio, adding homes in more destinations. So basically what they do is that they allow you to co-own a luxury property, right? And once you co-own that luxury property, they manage the rentals, manage everything. And so for them, is a sweet position because they're using somebody else's capital to buy the asset on one side, and then they would rent it out, blah blah blah. So they make money off the sale of the asset. They would also make money from what's it called, from the rental, if you get what I mean, such that it's a good deal for them. They are not holding tight on their capital, if you understand what I mean. um so that's that. So now, from an investor perspective, the business model is sweet. The business model is viable. They have a first mover advantage. They have done the both of co-founders have a good track record, right? So you might want to check it out now. The thing is that the minimum investment is $1,000, right? But it's one of those things where if you get in and you're getting that this one is like $2.80 per share, right? That's what they're saying. But the minimum you can invest is $1,000. So that's about 400 units ish, right? But it's one of those things where if you look at it, you can look at it in like a couple of years later and say, oh my goodness, what was $1,000 that I couldn't jump in when I had the opportunity, right? So if you want to go check it out, it's just us bringing things to you so you don't miss it. And this is like public news. So yeah. Now, just to let you know that our Beat the Odds workshop is coming up again on the 28th of June. Sorry, I'm using my laptop. Does I look like I'm looking down? I'm trying to pop it up if I can find it. Okay, I can't find it. But yeah, we have a Beat the Odds workshop. Basically, if you need to put your finances in order, the link is in the description. Check it out. If you want to put your finances in order, if you know that you're struggling, you're making money, but it just doesn't feel like you are put together, yeah, the workshop is for you. We have amazing testimonials. Check it out, the link, it's in our bio, it's in our description, and don't miss it if you need to, because you need to actually take a stand on your finances. If it's not in order, you need to put it in order. I highly recommend. I'm moving on to African news. On African news, we have that Kenya just issued a euro bond. Now, first of all, for those that don't know, what's a Eurobond? Kenya's currency is Kenyan shillings, right? But basically, they have borrowed money in USD. Now, why do countries do that? And it's not just sub-Saharan African countries. Everybody does that, right? What it does is that it helps their reserve position. It helps them to do transactions where, as a country, they need to pay in USD. So they have that USD liquidity for it, right? And then it also allows non-locals to have access to their economy while being in a stronger currency. What do I mean? I am an investor from Europe. I don't necessarily want to hold Kenyan shilling assets, but I like Kenya as a country. So I, as a Kenyan government, I would issue a euro bond. Why? Because I can still get your money. You are in a currency that everybody is happy with, and then I can use your money and you're also getting the returns. Everybody's happy. That's literally it. Now they've issued a Eurobond, and that Eurobond is set to mature in 2036. Now there are some cool things about it. One, they have a Eurobond that's supposed to mature in 2027. But what they did was that a portion of the proceeds from this 1.5 billion raise is going to use to pay down that Eurobond earlier than normal, right? Now, not just earlier than normal, like pay it down immediately. Now, why are they doing that? What they are actually doing is that they are smoothing their cash requirements, their dollar cash requirements. They are saying that we want to be able to this money we're getting, let's pay down this one as much as we can, and then push forward when we will need to pay back, right? So they can use that money as many times as possible within their economy. That's one. Now, the cool thing also is that they set it so that 2036, when it's maturing, they won't pay back everything at once. From 2034, they'll pay back a quarter, that's 500 million, another 500, another 500, so that they are still smoothing their cash flows. What is this? Is a good signal. It tells you that as a country, they are thinking, they are looking at their pressure points, because the last repayment was a pressure point. It was a real pressure point. So they are looking at their last repayment and they're saying, how do we make sure that this doesn't happen again? And what kind of liquidity do we tend to have as a country right now? 500 million is not too stressful for us to pay up. So we are saying, as against bringing out 1.5 billion at once, bam, let us stagger it over a 3-year period. And investors were happy. It was oversubscribed. It was successful, and they have gotten their money. What will you do for them? It would help their exchange rate to be a little bit stable. It doesn't necessarily, borrowing doesn't necessarily impact your what's it called, exchange rate that significantly high, Iola. It doesn't necessarily, that's not the only thing that make your exchange rate stable, but it's one of those things, right? So for them, big ups to Kenya. They are making progress. There's a lot of good PR around Kenya in a lot of ways, and the government is also trying to show that, okay, thank you for trusting us. We also are thinking ahead, so it's good for everyone. Fantastic on that. Now, some news that I just wanted to highlight, right? Tanzania just built a new bridge that's like a longest bridge in Africa type thing, right? And it's connecting a major trade route, right? Where they used to use boats and ferries and it wasn't very efficient. And basically from moving things and goods and agriculture in hours is going to take minutes to cross the bridge and to connect. Why am I talking about this? Why? Because infrastructure is the bedrock of the economy, right? And they're also saying that this is part of a project that is going to connect the landlocked countries in East Africa. Now, these things are long, right? They started this project in 2019 with the previous president. Fantastic that they continued it in the new leadership, right? They started this in the previous presidency, and they just completed now in 2025, which is like 6 years after, right? And they're going to launch the bridge 1st of June. But what does this mean, right? Infrastructure projects tend to take long, but the truth about it is that once that bridge is opened, right, the cost of logistics for goods and services, for goods crossing that lake, will significantly come down, right? The volume of trade would increase over time. So that if for you your restriction in the, oh, how many of these can I transfer in a day, and it was 10 before, now it's left to you to decide how many you want to do, because it's minutes to cross right now and it will be cheaper. Do you understand what I mean? But what am I saying? When we are looking at especially developing countries, especially underdeveloped locations, we have to look beyond the now and say, okay, if they are planning to do this and they are really working to do this, what how can I position myself to benefit from it? And most times opportunities are around us. We're hearing it in gist, we are hearing it in conversations, but we're just looking at where we are right now and not thinking where can we possibly be and how do I position myself for it. That's why I brought it out here. But big ups to Tanzania for this. We wish them well. Also important to note that these sessions are powered by the Money with Club, and so if you haven't already, just check us out. Unfortunately, if you want to sign up right now, you have to join the wait list. But we open up intermittently to new members. So just join the wait list. And if you haven't already, we have a free newsletter service on Substack. So you can subscribe to that so that you can get inside gist. And then before we go to Nigerian news, our book of the month is The Richest Man in Babylon, right? And what we do is like we just pretty much try to highlight um things from the book. It's actually a really good book. The previous book of the month was The Secrets of a Millionaire Mind, right? These are really good books, really, really good books for you to read and expand your mind when it comes to personal finance and investing. So you might want to jump on those. Let me see if there's any other thing I need to mention. Oh yes, we have some if you're someone who um is living abroad and knows that you are not very put together when it comes to your finances, you're just in the rat race of working. We have like a small tool that will help you assess the things and know the things that you need to do to get to that point where you feel that sense of security, especially when you're earning well, but you just don't feel secure, right? That it's a thing, right? It's actually a very, very popular thing. So you are not alone, but then there are things that need to be done, right? So we have a checklist, we have a list of things that you need to do. It will be somewhere in the link there. Just look out for it. If you're an African in diaspora, it's something you need to jump on. So we welcome you too. Finally, let's go to our final news. Nigeria. Now, I thought this was very interesting. Now, Tantalizers PLC. Now, if you know Tantalizers, like the restaurant that doesn't necessarily look good, that you're not really sure you want to eat in, yes, that's Tantalizers. It's actually owned. It's actually the company is actually a listed company on the exchange, right? So I mean, these are the things that we see, and we're like, really, do we want to invest in the exchange, right? But guess what? They have gotten up and they are saying that they want to do things differently. They are waking up to the realities of our economy and the opportunities. And they are saying that one, they want to go into the blue economy. They want to start a fishing business. They're investing some capital there. They've gotten some partners and doing all that. And then they've also bought a media company, right? And what are they saying? They're saying that they are tapping into the young people's ecosystem. What are the things that they are particular about? So they have food already. They want to go into entertainment, and then they want to go into food, because last Nigeria is importing most of their seafood, but we have water right beside us, so there must be fishes in there. Now, what do I think from an investor perspective? I think it'll be good to see, because they've also done some hiring, they made announcements on some new leadership and all that. So it appears that they are sitting up. Now, this is one of those things where you can be looking at them with disdain until the cheese moves in front of you. So I would say that we should keep an eye out on them, because most of these companies, they just wake up, like you just see, realize that okay, these people are working up, decided to take this thing further. I mean, might even dig deep to find out who are the people that have woken up, and what is their driver, what is driving them to do this. But what am I saying? Let's keep an eye on them and their moves. We would eventually, they have some contract that they say they've signed, and all that. We'll be eventually begin to see, yes, it won't be straightforward, it won't, there'll be bumps along the way. For example, the movie industry in Nigeria is going through a lot. So it'll be interesting to see their angle, if you get what I mean, and how they will position themselves. But I mean, I think it's laudable to see that the company is waking up, especially because there are loads of untapped opportunity. And if they have the capital, why not? If not, so big ups to them. And the final news is just a general discussion about central bank and the Nigerian economy. Now we know that there are two parts. There's the fiscal and there's the monetary. And then there's monetary is central bank, fiscal is the tax man, Ministry of Finance. Yeah. And all. But we know that there were some tax bills that have been signed, that there's some things that are still in the works when it comes to taxes and stuff. But let's talk about the central bank. The central bank had a meeting this week, and basically they maintained status quo in all their, what I call them, drivers, all their indicators, the things that they watch every month, or they review every other month, rather not every month. Now, what is really happening? The central bank is saying that okay, there's so much uncertainty. Inflation is not necessarily where we want it to be, but we can't keep taking interest rates up. And it's just a reality, because while we are trying to tame inflation with interest rates, right? Manufacturers are complaining. The economy is stifled, because if you cannot borrow, then you cannot turn over, and the economy will not grow. So you see that balancing between growth and inflation management is a tough job. I do not envy the central bank at all. I do not. However, this is where they are, and this is what they are saying. And for me, I think that we need to keep an eye out on the leading indicators. For example, oil prices doing a little bit of yo-yo, but then we are shielded locally, somewhat shielded, thanks to Uncle Dangote and his local prices, and the local, thanks to Dangote and the NNPC, in fairness, and the local pricing for fuel and crude oil, right? But what am I saying here? That we need to be aware of the changes in the economy. We need to be aware. We need to put an ear out for what the central bank is looking out for. It'll give us indications on where we should be positioning ourselves. The central bank is looking at FX, and it's saying it has been relatively stable. It will slide up and slide down, but relatively stable. It's saying that inflation is not where it should be, but then it's sort of not driven by exchange rate. You get it? There are other things beyond central banks' control that are driving inflation. So there's a limit to what they can do. And they are saying, let's keep status quo. So we watch and see. And they will come again in the next 2 months. But what am I saying? Be aware. Be aware that there are things that are happening around you. There are things that the central bank is looking at. And also you need to keep an eye on it for your personal portfolio. On this note, I just want to say thank you. Thank you to everyone that joined in. I saw Iola here earlier. Um, So I'm looking at my laptop to see if I didn't miss anything or anybody's chats. But yes, don't forget that you can't outsource your health and your finances. This is why this session is there, so that things that seem like Greek, we can break it down. And of course, please note that if you see any news, if you see something that just doesn't make sense and you want us to explain, drop it in the comments on this, wherever you see it, YouTube, LinkedIn, wherever, right? And then we would gladly unpack it. Why? Because the most important thing, you're working. The idea of the work is for you to actually have money, and for the money not to just not disappear or lose value while you are sleeping, right? Or while you are awake with your eyes wide open and still sweating to work, So the idea of these sessions is for us to educate you. It has to be short, it has to be, so you have to select out of all the news what to talk about. But on request, we will definitely talk about stuff. Thank you so much and have a beautiful week ahead. Bye.